No one likes tax. It can literally feel like you've been robbed each and every month when you get your payslip and SARS has already somehow deducted money from your pay. And you might actually be wondering where all that money goes. I mean, if you actually add it all up, you're paying quite a lot of tax within 1 year. So where does that money go and how is it actually used? And that's a very good question, especially considering that South Africa has one of the highest tax rates in the world. And actually, to bring it into perspective a little bit more, if you look at the 2014-2015 tax year, 87% of the government's spending or the government's finances actually came from taxes. And from that 87%, 27% was actually specifically from income tax. So you want to be asking those questions, you want to know exactly where your money is going. So let's take a closer look at your payslip. You'll notice that from the deductions that are made, there are two standard ones. There's your PAYE tax as well as UIF. Let's start with your PAYE tax. So PAYE essentially stands for pay as you earn. You pay your tax as you earn your income. With that tax, that's actually the money that the government chooses for social development, for building roads, maintaining hospitals, building schools, paying teachers, paying civil workers. And actually, I want to highlight this one because I think it's a very important one. They use it to fund SASSA. And you already know that at the beginning of each year, the finance minister comes out, he does a budget speech, and he tells us everything that the government is planning to do with our money and all of that. That your PAYE tax is actually funding all of those aspirations, all of those goals. As I said, your income tax is divided into two. So your second one is your UIF. We don't usually think of UIF as tax, but at some level it actually is. So UIF is your unemployment insurance fund. It's like an insurance product that's essentially meant to help actually protect you in the case where you're actually unable to work for specific reasons. If you're unable to work because of retrenchment, if you're unable to work because of an illness, or you're on maternity leave, your UIF is actually supposed to kick in and start paying you during that time where you're unable to work. So UIF is like insurance, but it's also tax. So your employer is actually the one who's supposed to pay or supposed to deduct those amounts before they even give you your paycheck. So they're supposed to deduct the PAYE tax, they're supposed to deduct for UIF as well, which makes it great so you don't necessarily have the burden of actually thinking about it. But I was watching an episode of Checkpoint where an employer actually didn't do this. So it's important for you to actually know so that when you look at your pay slip, you want to be expecting to see that PAYE tax being deducted. You want to see that UIF is also being deducted. So as much as we don't like tax, as much as we are definitely not fans of tax, it definitely has a role to play in society. It's what keeps the society going. It's literally what keeps the country developing, and that's a very important role to play. So I hope this video actually gives you a little more perspective into why you're paying tax and how it actually works. If you really like this video, be sure to hit the like button. If you're new here, thank you so much for clicking on this video, and be sure to subscribe. We have a video out for you every single week and we never miss an upload. So watch out for our videos every single Wednesday. You can still click the subscribe button, click the notification bell, and you'll be one of the first people to actually be notified every time we upload a video. But until I see you on my next video, bye for now.